Welcome to the video. Before we dive in, let's be clear, this is not a politically motivated video or about allegiance to any party. Whether you lean left, right, or center, one thing is certain: every election brings changes that impact jobs, incomes, interest rates, and the overall economic structure. Policies shift, regulations change, and sometimes entire industries are affected, depending on who takes office. In this video, we're going to discuss how to get financially prepared for the impact elections can have on the economy. We'll explore several key areas like jobs, taxes, interest rates, incomes, the stock market, housing, inflation, and retirement. By the end of this video, you'll know how to position yourself and your finances to weather any changes, no matter the outcome. If you are new to the quest, be sure to join the MoneyMind Quest Champs and stick around till the end to take our financial literacy fitness test to upgrade your money skills. Let's get into it. Let's start with jobs. Every election can bring changes to job markets as new policies impact different sectors. For instance, a shift towards more green energy policies could spur growth in clean energy jobs while reducing opportunities in fossil fuel industries. On the other hand, policies that favor deregulation or trade changes could reshape manufacturing and service industries. Diversify your skill set. Stay relevant by expanding your skills in areas less susceptible to political fluctuations, such as technology, healthcare, and renewable energy. Online courses, certifications, and professional networks can help future-proof your career. Keep an eye on government contracts. If your industry is dependent on government contracts, closely monitor which sectors are likely to receive funding based on the political platform. Emergency fund with potential layoffs or job cuts. An emergency fund can serve as a crucial financial cushion. Aim to save 3 to 6 months of living expenses to protect yourself in uncertain job markets. Elections often bring changes to the tax landscape for individuals and businesses. Whether it's corporate tax cuts, increased tax rates for high-income earners, or new deductions, these changes can directly impact how businesses operate and how much individuals take home. For business owners, stay informed on proposed tax laws, whether corporate taxes are going up or down. Understanding tax breaks, deductions, and potential increases is essential. Consider speaking with a financial advisor or accountant who can help you navigate tax strategies based on the upcoming changes. For individuals, take advantage of tax deductions, credits, and retirement account contributions while you can, especially if tax rates are expected to increase post-election. Stay flexible, use strategies like keeping a portion of your income in liquid assets or investments that can be adjusted quickly to take advantage of any new tax breaks. Interest rates can shift based on the election outcome, depending on the government's fiscal policies and how central banks react to those policies. A new government may prompt changes in monetary policy, affecting borrowing costs for businesses and consumers alike. Higher interest rates increase loan costs, while lower rates may encourage more borrowing and spending. Lock in fixed-rate loans now. If you're anticipating major purchases such as a home, car, or business equipment, locking in low interest rates before they rise can save you money in the long term. Pay off high interest debt. Reducing high interest debt will help you be less vulnerable to future rate hikes. Monitor savings accounts. Rising interest rates can also benefit savers. Be sure to park your money in high-yield savings accounts or other interest-bearing accounts to take advantage of any potential hikes. Political changes can affect the minimum wage, overtime regulations, and tax brackets, all of which influence your take-home pay. Incomes could also be affected if industries you work in are influenced by government regulation or deregulation. Consider side gigs. Developing additional income streams can shield you from potential downturns in your main income source. Freelancing, investing, or even rental income can help keep your finances stable. Negotiate pay increases. If your industry is poised for growth or new policies favor your job sector, negotiate for a raise before the election outcome affects wage discussions. Stay adaptable. Keep your personal budget lean and flexible to handle shifts in income that may come with policy changes. Avoid long-term financial commitments that could strain your budget if your income fluctuates. Be sure to take the financial literacy fitness test at the end of this video to understand areas you need to improve on financially. The stock market often reacts to political uncertainty. Pre-election periods tend to experience increased volatility as investors speculate on policy changes that will impact corporate profits, taxes, and trade. This volatility can ripple into other investments like mutual funds, ETFs, and even pension funds. Don't panic sell. Volatility is common during election periods, but staying the course with a long-term investment strategy is usually the best approach. Selling during a dip can lock in losses rather than letting your investments recover. Diversify your portfolio. Spread your investments across different sectors and asset classes to protect yourself from downturns in any one area. Keep an eye on sectors. Certain industries such as healthcare, defense, or renewable energy may benefit or suffer depending on election outcomes. Adjust your investments to reflect potential shifts in these sectors. Election outcomes can impact the housing market through changes in mortgage rates, government incentives for homeownership, and tax benefits. Policies around affordable housing, rent control, and real estate development can directly affect both buyers and sellers. Buy or refinance strategically. If you're considering buying a home, pay close attention to how interest rates and mortgage policies are expected to change. Locking in a low rate before potential hikes could save thousands. For investors, keep an eye on government policies aimed at affordable housing, zoning laws, and property taxes. These can directly impact your rental income and property values. Build home equity. If you're already a homeowner, focus on building equity by paying down your mortgage and making strategic home improvements. Depending on the policies put in place after an election, inflation may rise or fall. Increased government spending, tax cuts, or deregulation can all fuel inflation, driving up the cost of goods and services. Adjust your budget. Plan for rising prices by cutting unnecessary expenses now and creating a flexible budget that allows for adjustments in case inflation spikes. Invest in inflation-protected assets. Consider investments such as Treasury, inflation-protected securities, tips, or real estate, which can act as hedges against inflation. Stock up on essentials. If inflation is expected to rise, buying essentials in advance can save money before prices increase. Retirement savings can also be affected by elections, especially through changes in tax laws, social security policies, and healthcare costs. If the stock market experiences volatility, retirement portfolios could take a hit. Review your retirement accounts. Ensure your 401k or IRA is well diversified to handle market fluctuations. Rebalance your portfolio if needed to reduce risk as the election nears. Take advantage of tax breaks. Maximize contributions to tax-advantaged accounts like Roth IRAs or 401ks while current tax policies are still in place. Consider healthcare costs. Be prepared for potential changes to Medicare or other healthcare policies that may impact your retirement plans. While we can't predict exactly how an election will impact the economy, being proactive and prepared is the best way to safeguard your financial future. By diversifying your income, investments, and skill sets, and by keeping an eye on key indicators like taxes, interest rates, and inflation, you can stay ahead of the curve no matter the outcome. Take the financial literacy fitness test using the link in the description below to improve your money management skills. Thanks for watching. Don't forget to like, subscribe, and hit the notification bell for more insights on managing your finances.